What do you need from Jay Powell? Is it more of an indication of kind of forward-looking of how many rate hikes? Is it, something on the inverted yield curve and what that means if it happens, or just continuity?
I think just no surprises. I think people are not expecting any fireworks today, and I think delivering that would be actually a good underpinning to markets, particularly after the volatility that we saw in the first quarter, and that change in tone of the markets where you saw bonds and equities both moving down rather than up. So that increased volatility, that correlation going the wrong way, the way that people don't like correlations to go. So I think the Fed here, we've had those interest rate rises up to now. Market isn't expecting anything, no surprises would be a good result.
What is the Fed's main dilemma right now?
Well, I mean, Feds always have a dilemma about the path of growth, about the expectations of markets, about inflation. Actually, corporate earnings are doing pretty well. They've been ahead of expectations. Inflation, we've got enough inflation. It doesn't look like we've too much inflation. We're kind of on target on inflation, I would say. So I don't think there are too many dilemmas. I think that the challenge is simply don't do a misstep that spooks anybody at this point, particularly when you set this in the wider context of a lot of uncertainty around trade, around some of the geopolitical relationships. I think the mantra is don't mess up here, steady as she goes.
And when you look at M&G Investments and when you look at the mathematics of bond bear markets, I believe that is yield higher, prices lower. It's never a smooth gradient. There's always jump conditions. What are the kind of jump conditions that we could see in the bond market where we get jumps in yield and lower prices suddenly?
So there's always, against this backdrop, there is stuff that could happen that would shock the market into doing different things. It's very hard to predict what those are in advance, which is a trite thing to say. We all know that. But we are moving this year from a position of net bond purchasing by central banks to a situation where we've got net bond issuance right around the world. And the market is still adjusting to what that looks and feels like. Effectively, you've got a big buyer who is no longer going to be buying, if you like, right around the world. And I think that is the tipping point. It's about the demand and supply for those bond issues that are out there. So I think, to me, that is the big one that we're navigating this year. It is a different backdrop to bond markets in general.
Yeah, Francine, this is really important, what she just said there. Anne Richards goes down to microeconomic principles when you look at a big macroeconomic view from 30,000 feet thing. I really agree with that this is about microeconomics here forward for Chairman Powell.
It is, Don, but if we bring it back to the markets, and what do clients want? I mean, what kind of strategies do they ask of you?
So I think smoothing has definitely been something. I mean, people have got quite used to this relatively low volatile world, at least in listed markets. And so in conventional markets, you could argue there's been a lot of volatility in non-conventional markets like digital currencies and Bitcoin, all that sort of stuff. But in conventional markets, volatility really had become sort of very subdued. Yeah. And suddenly there's been that shock back into a volatility world. So removing that volatility, so trying to seek out where you have counter-correlated assets to kind of smooth that path is definitely one of the things that people are out there. Having said that, I think a lot of people are looking at the underlying power of earnings that we've got through coming from the corporate sector and looking at the trade-off of the risks that you now see and still not getting a lot of real yield out of bond markets and still getting quite a powerhouse in terms of earning growth from equity markets, and saying actually the price of that extra volatility in equity markets might be worth paying because you can really see the fundamentals coming through. So I think there's a number of... It really depends always on your utility curves, preferences. What is it that is most important to individuals? And there's no one summary you can say all individuals want this or all individuals want that. So I think those are two of the themes that we would see coming through in conversations with clients.
I mean, has the conversation shifted in the last couple of weeks because there's a little bit of a slowdown in economic growth worldwide? And actually, what does that mean, again, for market sentiment in the future and the correlation with monetary policy?
It's fascinating, actually. You see people, how quickly sentiment changes and what people talk about. So some of the things that I just perceive that people are suddenly talking about again, gold has come back, sort of inflation, gold. Suddenly, we didn't talk about that 6 months ago. Suddenly that's back on the conversation again. So that's one thing. I think that the oil price, frankly, is another. You've seen the oil price, which everybody said was very subdued for a very long period of time, and it's sort of snuck up on us. It's sort of gradually been moving into territory where, despite the fact you've not seen the investment really start to go back in again, actually the economics start to make that more appealing. So there's some interesting conversations around oil price, commodities and the knock-on effect of that. So I think we're going to see a change in tone in some of those conversations. The whole tech conversation and what does a successful business model look like in technology. Again, 2016, 2017, big tech was winner almost regardless of what it did. Much more discrimination coming into the conversations that we have with clients about what a good business model is, what a bad business model is. So a bunch of different things.
And Richards, Megan Green writing in the FT today on where is inflation. We're all waiting for it. I guess we'll hear about it in the non-press conference today of the DED meeting. Where's the inflation?
Gosh, what an interesting question. Inflation comes in all sorts of different places and unexpected places, I think. So conventional inflation is varying country by country, market by market quite significantly. Oil price will be feeding through into inflation numbers. That's absolutely the case. But on the other hand, if you see what's happening on the retail high street, you can see the high street is challenged still by falling prices in many areas, where on the other side of that coin, you've got internet prices actually going up in some respects. So you've got quite an interesting contrast there. So I think overall in inflation, it's still a very difficult picture, I think, for anybody to grasp the totality of it. But oil price starting to feed through is definitely one. And some of the big currency moves, you're actually seeing currency-induced inflation rather than fundamental underlying inflation.
Exactly.